Let's begin.
What's up guys, I hope you all are doing fine. Today in this video we are going to be teaching you guys how to trade in line with the order flow, or how to trade in line with the trend. Don't get confused, order flow and the trend, they are the same. And I'm going to be giving you guys 4 keys on how to trade in line with the trend. And number 1 is mapping out your swing highs and swing lows. Guys, this thing you see, which is trading, is very crucial. Now, what do I mean? If you're going in line of trading, you need to understand that it deals with principles and laws. And if you don't go in line with the principles and laws, definitely you're going to be hitting stop losses every day. So in trading in line with the trend, you need to know where your swing low is, and you need to understand where your swing high is, so as to do what? To eliminate a lot of noise from the trading journey. And number 2 is wait for a proper break of structure. Most of you might not be trading SMC, but provided that you are in my video today, it simply means you're going to be learning a lot about SMC. So break of structure simply means when a high is taken out or when a low is taken out, and the trade continue to do what? To go in line with the trend. Let's say you have a bullish trend, and the market start breaking the high highs and higher lows. It keep going. These are break of structures. It moves the highs and moves the highs and continue bullish, right? Then the third step is this: waiting for an internal structure to be formed. Now, an internal structure simply means a range between a highs and a low. When you see those internal structure forming, they are probably letting you know that the pullback has begun. And when the pullback has begun, you don't want to be trading the pullback, you want to be trading what? The impulsive move. So these are the ways to trade in line with the trend. And now, when you have seen all these things happening in your trading, there is something you need to understand. There is a reason why we have a Fibonacci. That brings us what? To the 4 keys of trading in line with the order flow or with the trend. Now, what is Fibonacci? These are the tools that are used to know the 50% of a price actions. And trust me guys, sometimes we do play with all these tools that we see in our trading view. These tools are very much important, and I'm going to show you what Fibonacci can do in your trading journey. So if you're new to this channel, please like and subscribe and share to your friends who are also traders or who are also into SMC concept. So let's see you guys in the practical aspect of trading with the channel. If you're new to this YouTube channel, please make sure you subscribe and leave a comment below. I have replayed the market already to this extent it is right now, and what we are going to be looking at is Australian Japanese yen, of which I have replayed the market on a weekly time frame. As you can see here, we are on a weekly time frame. So what we're going to be doing right now is to drop at what? We're going to drop at daily time frame. So what do I consider first? What do I consider first? So if you look at our board, you might see this. So you will see this. Number 1 is mapping out my highs and lows in the market. So what I mean by highs and low is your major swing highs and swing lows. So these are very important thing you have to have in the back of your mind, provided that you are trading Forex. Aside from that, you'll be hitting a lot top losses in the market. So we're going to start from here. Now, if you look at this zone, from here, market was trending to the downside, okay, before it came back and reversed to the upside, and we started seeing the market trending to the upside. So this is what we're going to be doing. Now we have to make sure we map out all the highs and lows to the place the market is right now. And this is how I do my thing. So let's say our market is in this zone, right? So what are we saying? We clearly know that we're having a bearish move, right? So, and this bearish move, we have what? We have our current highs, okay? And we don't know where our low is yet. Why? Because our market has not start moving out an internal lows or highs. But at the moment, we know where our what is. We know that we had a break of structure. Now, what is a break of structure? A break of structure is when a market removes a high or a low, it automatically break a structure, right? So, in trading in line with the trend, we all know that the market is bearish. So, what are we searching for? Definitely, we're going to be searching for a selling opportunity that is going to come by, right? So, what do we do to know where our low is? So, let's say we fast forward this market. So, fast forwarding this market, you have to know that we have what? The internal being removed. So, when the internal is removed, this is letting you to know that 4 hours time frame has switched to bullish, and right now they are about to go for what? For a daily pull back. So what do we do in this scenario? So in this scenario, you already know where your low is. Why? Because our daily low and internal high is being moved. So when a daily internal high is moved, what do we do next? So the thing you do next is this: you pull up your fib from the swing high down to the swing low, right? So what do we want to be saying? We want to be taking a trade that is coming around the zone. Why? Because this is a 50% zone, and this is what? This is the discount zone where we want to be taking a trade from. Now, any man who is trading will not be liking to take a trade from a 50% zone. Why? Because a 50% zone is a zone that the buyers and the sellers meet to start consolidating and consolidating and consolidating. So the consolidation simply means a buying and a selling meeting point. That's what 50% usually means. That is why under your 50%, if you are to go to your chart and look right now, you see that in your 50%, you see most of the time, you see something like this consolidation, market push up, push down, push up, and push down. That is where you see a lot of consolidation happening. So what do we want to be doing? We want to be buying from what? From a discount level and selling in what? In a premium prices, right? So what do we do next? Now we are to pay more attention because market has come towards what? Our discount level. And we want to be doing what? To be selling from that area. So now we know that we want to be selling from that area. What do? We pay attention to two things. Number one, where is our supply or demand? This is a whole supply for me, and this is also a strong supply for me. Yeah. So why? There are a lot of confluences to that because this low was a low that was able to break this internal low because they're having that consolidation. So what are we looking at here? Now the what we're going to be looking at here is a price that will remove a low and remove a high at the same time so that we can be able to do what? To find a proper zone where we can be placing our trade from. So let's fast forward this market and see what it does. So if you look at the chart, you see that we aggressively broke, right? So now it is showing you that what happened. It is showing you that we have aggressively switched to what? To a bullish structure. So there is no need to do what? To wait. So what are we going to be searching for right now? Right now we are going to be searching for what? Is buying opportunity. Why? Because the market has automatically switched to what? To a bullish. Now we are free to pull up our Fibonacci from the swing high and down to the swing low. So we delete this because this has served its purpose. So now deleting it, what are we going to be searching again? You search for where price was able to hold. Price was, it is aligning with our what, with our discount level as well. So we pressed more, we came down. So where we are right now is where we might be searching for what, for a buy opportunity, right? And look at what the market did. Market end up tagging into that area and moving. So this is whereby we start having what, a break of structure to the upside. So this becomes what, our low. And let's press more, let's press more, let's press more. So here we have this. That was a very proper break of structure, and our low is here. So this is our low, and we don't want the market to violate this zone. So now it tagged into that zone and moved for a buy. So that was a proper buy, of which the buy was very, very nice. So where do we see our low? Our low is still here. Why? Because fine, yeah, there is an internal low already. So let's just consider that one. So we moved, we started breaking bars to the upside, breaking bars to the upside, breaking bars. So we moved and opportunity from that area. So market was not able to violate that zone. So this zone was strong a bit, and this was also strong. So we end up having what? End up having a low here, putting our low to be a new low for us. Then this should be our internal low, where we are to know that our pullback is about to start. So we shift our swing to high to here, and our internal is supposed to come up here. Let me just use here, yeah, because that is very obvious. So here right now, if we are to have something like this and we're to call this our low, so definitely this becomes our swing low, and we don't want the market to violate that low. But if the market violates the low, then it simply means we are right on track. Okay, that was not a break for me, and this was still a low for me. So we still have our low to be here, but let's watch clearly. So, and market did not violate that low, so we end up having another break, but that was not a proper break. So this is what we call what, structure. So all these things you see now is a signs of weakness. That is a signs of weakness. So we end up playing around with that zone and breaking aggressively. So now we have switched to what? To bearish. Now we have switched to bearish. We have a proper break of structure from that zone. Then from here we had another break to the downside. That was a break. Okay, that was a break, and we have a zone here. We don't want the market to violate, so we end up selling from that zone, liquidating, and we sold. Okay, so we have another break of structure. So right now we keep having break of structures to the downside, and yeah. So now I believe we have switched to bullish. No, this still remains our high, because market might end up playing around with that zone and we might be liquidated. So yeah, we end up having this break of structure. Bam. So now we switch to bullish. Yeah, we switch to bullish. So, and but yeah, so we have to take our swing high from this zone to our swing low. So we expect market to come towards a zone that will be very nice one. So let's take these as our zone. We found this, then we expect market to do two things there. Yeah, so we have this is moved. That was a very good one, and this was the zone that pulled up the high. So we're supposed to be taking a trade from this zone probably and targeting this high. Yeah, let's see. Yes, so that's supposed to be our trade, and trust me, this kind of trade can be so annoying because we can't wait for this whole day for the market to do all these things before giving you these silly moves. This, of which it is almost a month and some more. Okay, yeah. So we end up having that moved, and we have a breakout structure to the upside. Then was that zone, it never came, so we have another break of structure. So guys, this break of structure, we don't want this price to close beneath. We never want the price to close beneath there. When it closes, then our structure is changed. That was a proper close. That was a proper close. So we sell number one, sell, yeah, sell again. Okay, that should be a liquidation for us. It is okay, market can do such. So now we have this break. So market breaking lows and breaking highs at the same time. Then you see how this zone is a strong zone, but the zone I'm gonna be picking should be this. Ask me why. There are confluences to that, but I'm not gonna be trading this way. We have to follow our rules and regulations. Then pull up our fibs from this low to the high. Then we wait for the market to come down there. Yeah, market has come down there. Yep. So now we have switched to bullish because an internal was taken out, and we might use this zone to shine. Yeah, sure. That should be a buy, but we end up being liquidated. Anyway, it is okay. So here now we are sure of buying. So we can buy from that place to the upside, and that is how we end up having what? Another break of structure and another pullbacks, right? That have to do with 50 to 60% moves, and we came down, liquidated. I need to sell. Nice. We don't need this low to be violated. No, we don't need that low to be violated. If the low was violated, so we have a break here, have a break here, but I need the high to be moved before we can nice. So now we're assured of buying to the upside. Yeah, so we are sure of buying to the upside, and yeah, so we end up getting liquidated. So we change. How many of you like to trade this kind of pair? Because this kind of pair is just so annoying. That consolidates people, and that is it. And the end up being like, man, this thing is so annoying. It is just taking up my money.